What's going on, guys? My name is D. Anthony with Evolution Traders. In this video, I want to talk about a problem that I see a lot of futures prop firm traders making on a day in and day out basis, week over week basis. And that problem is over trading, but it's also having to do with a lot of revenge trading, as well as not being able to be disciplined enough to kind of cut yourself off after you start losing. So one of the main, common things that I'm seeing is that you're very excited. And when I mean excited, I don't mean like happy excited. I mean like you have a lot of anxiety, excitement to want to get that first win or two wins right off the bell under your belt. So a lot of traders are taking way too many trades off the belt to kind of pad up that P&L. And what I'm seeing is that a lot of traders feel like the more trades that they take, the more entries that they can find, the more money that they're going to make. And what's happening a lot is that you take a loss, you take two losses, and it happens, right? We all take those losses, but because they're coming so quick in the day, and I will say, within the first hour to hour and a half after the market open, what that's doing to you is causing you to want a revenge trade to get back to break even, to get back to green, and there's a very big lack of discipline that's going on when it comes to futures trading, because you're not putting things into perspective. Now, a lot of traders can see themselves making $400, $500, $1,000 very, very quickly trading mini contracts. I'm not saying, again, if you're a mini contract trader, meaning you trade the NQ, you do not trade micros, which is MNQ, that's fine. I'm not gonna sit here anymore and continue to make these videos and try to preach to a dead horse that you should not be trading minis. If you want to trade minis because you feel like you can make a lot of money, that's fine. But what you need to do is you need to manage your risk accordingly. Because, for example, a lot of you guys, and I'll just use a $50,000 account size as the example for this video, you have a $2,000 drawdown limit. So what's happening is you guys are trading larger size. Let's say you take a loss of $300 or $400 on one particular trade. You're immediately looking for the next best entry, right? You're looking for that next setup because you want to get back to scratch. And let's say you take another loss and now you're down 700, 800. You don't know how to cut yourself off. But let me paint a picture for you, my friends. You guys are trading a $2,000 account. So I think that one of the biggest misconceptions and probably biggest pitfalls that a lot of futures prop firm traders have is that they think that they're managing $50,000. They think that they're managing $100,000. So you have all of this room for error. You have zero room for error when you're trading a $25,000 or $50,000 account, even a $100,000 account. You have zero room for error. So what I'm trying to get, the point that I'm trying to drive home is that I need you guys to start understanding that regardless of what the account size is, 50,000, 100,000, 25,000, regardless of what that number says when you sign up, you're managing that total drawdown risk. So again, for the sake of this video, we're going to use that $50,000 account as our base. That's our example. That's our sample size. We have a $2,000 drawdown limit on Top Step or $2,500 drawdown limit on Apex. That's your account size, my friends. So if you take that losing trade, where let's say you lose $300, $400, $500, guys, you're giving away almost 15, 20% of your total account. Those of you guys who are lacking the discipline and you go down 500, 600, 700, 800, you're losing 30% of your total account size. If you worked for a firm, if you worked for a company, let's just take trading out altogether. Let's just say you're a risk manager and you just manage cash for an account for a company. If you were to lose 20 to 30% in a single day, I don't think any one of you guys would still have a job and be employed tomorrow. So if you look at it, if your job is to manage risk first, identify setups second, then why are you even allowed to go down $500, $600, $700, $800, $1,000 in a day? How? Some of you guys are hitting your daily max loss for on Top Step. They'll shut you down at $1,000 loss limit for the day, make you come back tomorrow to trade. Some of you guys are blowing $1,000 2 hours after the market open, and you're coming back and you're doing it all again tomorrow. If you have a $2,000 account, imagine this. You personally deposited $2,000 into a personal brokerage account. Let's say you take 2 trades and you're now down $800, $700, $1,000 in 2 trades in one day. You just essentially lost half of your account size in 2 trades. Does that sound right? Does that sound healthy? Does that even sound remotely responsible? Like, think about it. Well, I only paid $50 for the account. Well, guess what? You're going to pay another $50 because you are going to lose that account. And then you're going to lose the next one. And you're going to lose the next one. And you're still wondering why this is not working. And instead of understanding that you're playing a game way out of your league, you think that it's the strategy. My strategy is not winning enough. I need to find another setup. I need to find another indicator. I need to find another time frame to trade. So instead of identifying that you're playing out of your shoes, you go to the next setup because you think that it's going to get you money back. If you lose $500 in a day, you're doing something tremendously wrong. Tremendously. 500. Like, listen. I want it's really funny because so many traders out there, especially the inexperienced ones, or the ones who haven't found consistency yet, or the ones who haven't taken a payout ever, or they've never really traded their own personal money. Like, I've traded my own personal money for 9 years. So like, when I go down 500 or 1,000 or 2,000 or whatever the case may be on any specific day, that's happened over the last 9 years, it hurts. Like, it doesn't hurt because I'm wrong. It hurts because that money is gone, right? And for those of you guys who are just buying evaluation accounts with prop firms and you blow 2,000, you blow $1,000 in a couple trades in one singular day, you're not even actually thinking that that's the problem. Like, you're not thinking that you have an issue with actually controlling risk and being realistic. You think that it's your strategy, that you need to win more. You don't need to win more. You need to lose less. And I don't mean take less losing trades. I mean, you need to lose less per trade when you take the trade, if it loses. And it's funny because most of you guys out there understand that to some degree, but yet you don't make the change. Why? If you don't want to make the change and you don't want to size down and you want to continue to play mini contracts, I'm going to tell you, again, you can play minis. That's fine. I know a lot of great traders that trade mini contracts, trade 1 or 2 contracts. They do fantastic. But if you do take a trade and you go down $200, $300, $400, you have to stop. Like, you can't even put yourself in a situation to lose $1,000 in one trade. That's preposterous. It's crazy. You'll never be in this business, longer than 12 months. Like, you just won't. So if you do take one trade, let's say it's 10 minutes after the bell, 15 minutes after the bell, and you take one trade and you lose $300, you have to stop. You don't get the luxury to trade again today. Like, you had your one opportunity and that one opportunity came and it left. So come back tomorrow and do it again and do it again and do it again and do it again until you find a level of consistency in your strategy and your setup or whatever. But if you take one trade and you lose $300, you lose $400, you lose $600 in one trade, and you continue to take another trade, you're going to have a tough time. You're going to have a tough time ever passing a combine. And if you do pass a combine, you're going to blow up a funded account within 2 weeks. And you're going to have a tough time ever being consistent. That's the truth of the matter. It's not the strategy. You're not going to find a strategy that's going to win more than you taking one big loss. I'm telling you that right now. Because even if you find a strategy that hits at 70 or 80% and you're winning, you're going to have that other 10 to 20% of days where you do lose, right? Again, even that if you're hitting at 75%, 80%, which is damn hard to do and is almost impossible. But let's just say you do have a strategy that wins at 80% of the time. That other 20%, you're going to take a blowout loss because you're not going to know how to manage it. And then when you take that blowout loss on that one particular day and give back a week's worth of gains or the last 3 days worth of gains and you blow up your account, you're then going to look at yourself and you're going to say, my strategy doesn't work. I need to find something else. How come I can't just take trades and then just continue to see my P&L go up? Because you're not managing your risk right. Like if you put yourself in a situation where you can potentially lose 25, 30, 40%, 50% of your account size, remember, your account size is that drawdown limit. So if you have a $100,000 account and your drawdowns, I don't know, 4,000 or something, you're managing a $4,000 account. So you better not be risking more than like $400 a trade, $500 a trade, like max. And even that's only going to give you like 8 to 10 trades before you blow up. But hopefully with your strategy, you're a little bit more consistent than, a 50% trader, and you can kind of break even and make a little bit of money at the end of the month. But again, if you don't want to understand that and you don't want to make the adjustment to have the discipline to walk away when you're down $300, $400, $500, you deserve to lose accounts, and you deserve to keep looking at YouTube videos and reading books and going on Reddit and asking questions as how come I can't get this, and feeling sorry for yourself, because most of you guys are out there feeling sorry for yourself. Like you just don't understand it. Like you feel like you've been putting in so much time and you feel like you've been learning everything that you can learn as far as setups and strategies and technical analysis. You feel like you're doing it all and you're still not winning. The real reason why you're not winning is because you don't know how to manage risk. As soon as you identify how to manage risk and how to actually shut yourself down from trading when you do lose, you're going to be profitable. But many of you guys are so anxious out of the gates. You take one trade, you lose $400, and the immediate thing that you do instead of walking away is take another trade and put yourself down $700. Stupidest thing that you can do as a trader. You will not be here in 12 months. And if you still are here in 12 months, you're still going to be buying resets and still be buying new accounts, and you never have taken a payout because you haven't understood how to manage the risk first. But more importantly, over the risk, you haven't managed to accept the fact that you are undisciplined and you are going to continue to make the same mistakes over and over and over until you change yourself in the way you manage your risk and the way you manage yourself. So you took a trade in the first 5 minutes and you lost $500. So what? It's not nothing to cry about. It doesn't mean, well, if I just hang around for another hour, I can find that setup and get it back. No, you don't even deserve the privilege to trade again, because for the first thing, you should have never lost as much as $500 on one particular trade. Maybe it should have been a $100 loss or a $150 loss or a $200 loss. Should have never been a $500 loss in the first place. But okay, that's fine. You want to trade that big size. That's okay. But if you don't have the discipline to walk away, then you deserve to blow up, and you deserve to keep searching on YouTube and searching everywhere else for answers that you're never going to get. When you hit rock bottom will be the time when you finally start to wise up. And I'm sorry, but that's the truth. I had to learn it the hard way 7 years ago. I made the adjustment. However long it takes you to hit rock bottom and finally understand and make the adjustment will be the moment you finally break through and get the clarity that you're looking for. Hope you guys enjoyed the video. Make sure to like, comment, subscribe. See all of you guys on the inside.